Welcome to Investing Confidential. We've had a really interesting bear market rally. I still think this is a bear market rally. Started sort of at the beginning of the year. I think it's run its course. Obviously, we've seen action the last few days that tells you it's run its course. And the main reason is I think people are realizing that inflation is not going down. It's going to come back to the front pages. I'm going to show you why in a few minutes. But first, let's look at what's rallied in 2023 versus obviously what was a disaster 2022. So if you look here, everything that was down in 2022 has rallied pretty hard in January in this beginning of February. This is natural. Okay, this is classic January positioning, January action. But look, folks, again, this is not, you can't look back. A lot of people saying, well, what's up the first 10 days or the first month of the year? The market determines the rest of the year. Look, here's what people don't understand. This is a new paradigm. Okay. We have highest interest rates we've seen in a very long time in terms of the action from low to high. This is the highest this is the most voracious rates have risen ever. Okay. We have the highest inflation we've had for 30 years. Okay. 30 plus years. You can't look at what's happened this year and then say, oh, look, 2006, this happened in 1992. No. This is new. Okay. We have not seen inflation like this. We have not seen rates rise. So scrap all that historical crap. This is not going to be the same. I mean, even crypto rallied, right? Off the lows. Gold rallied off the lows. Everything rallied. Okay, everything. And look, it's easy to know why. Okay? Look at the cash on the sidelines. Massive. Okay? Money market funds, as you can see, all-time high. All-time high. And that's just individuals. Also institutions had massive amounts of cash. Put call ratio, as I spoke before, everyone got bullish. We went from incredibly bearish positioning at the end of 2022 to everyone bullish. I mean, massive reversal. Okay. Obviously, you had incredibly high cash. Everyone was bearish going into so we had a massive rally. Okay. But it's reversed. Okay. Now everyone's bullish again. You listen to Wall Street, they're saying, oh, well, earnings are better. Look, you got to read between the lines here. Forget about what Wall Street says or CNBC. Everything's going to reverse, and you look at the earnings season, it was not good. Okay, not good at all. Everyone now, the consensus is a soft landing. Okay, everywhere you read, a soft landing, soft landing. That's the consensus. The consensus was wrong at the end of 2022, and it's wrong now. Everyone's talking. A lot of people talking about a new bull market has started. That's laughable. Okay. Again, let me go back to something that I think is the bellwether to watch. Apple. Okay. Apple, I don't know how anyone looked at these Apple earnings and bought Apple stock based on these earnings. I think people were maybe positioned bearish on Apple. I have no idea. But I mean, Apple gets most of their components from Taiwan. Not assembling, but the components. All these Taiwanese companies make all these Apple, the screens, everything. Okay. As you can see here, Taiwan exports are crushed. Okay. Semiconductor exports were down. This statistic came out today, the most in 14 years. Apple had lower revenues, lower earnings, manipulated earnings, but lower earnings. How does your PE multiple? It doesn't make sense. Your PE multiple cannot hold with lower revenue and lower earnings. It makes no sense. So there's something fishy here. Okay, let's talk about now inflation. Okay, inflation. The consensus is inflation has been tamed. Inflation's over. Don't worry about inflation. It's coming down. It's coming down. Powell even, despite whatever he says, he still thinks inflation is going to go 2% at some point. He's out of his mind. Okay, that's not the case. One of the reasons inflation has come off is because we've seen the government pull back. Okay, look at M2. This is cash in the system, mainly government spending. It basically stopped. Okay, I'm not going to say they did it on purpose, but certainly, this was part of the manipulation. Same with the oil strategic reserve. Depleting it. trying to get the oil prices down. But it's not going to help. It's not going to help at all. Okay, gasoline prices are rising, as you can see. Russia just cut output today. Okay, what's that going to do? It's going to continue the rally in oil. Okay, look at the stock prices ahead of this crude move recently. Oil stock people are buying stocks. The smart money's buying oil stocks because they know crude's going back up. Okay, food prices. I don't know if you've shopping eggs recently. Eggs are at all-time highs. Okay. Orange juice, all-time highs. I mean, Fed tells you wages are under control. No, they're not. As you can see here, no, they're not. Wages are just starting to really rise. Okay, look at non-farm payroll unit labor costs. I mean, they're decades high. How are wages under control? Sure, you've seen a lot of people take jobs. We talked about the hospitality. They've had to raise rate. They can't pay people minimum wage anymore, and they're not. Okay, hospitality has been hiring people because they've raised their wages. So this whole thing that wages are under control, complete hogwash. It's not happening. Okay, so let's look at the last couple of days. You've had stocks rallying, but the smart money, which is bonds usually is smart money. Look at the bond yields. They've gone up. All this data that rallied stocks, people took it in interpretation that, oh, rates are coming down, inflation. No. The bond market is telling you something different. Okay, the terminal rate. It's going up, heading towards 6%. Is that bullish? No, it's not. Okay, here's Fed futures. This is why everyone's bullish. This is giving fodder to the bulls. This is Wall Street. This is wrong. Okay, these Fed futures are pointing to this point, but no. These things are going to reverse. Okay, this is what is causing some of these computer screens to flash rallying. No. This is all going to reverse because the Fed has told you. Okay, even though we know Powell's a dove, he has no choice but to keep raising rates, especially with we're going to see at some point the next 2 or 3 months inflation spike up, the CPI. It's going to happen. I don't know if it's coming up on February 14th or the next month, but there are things happening. For example, okay, we talked about rents, we talk about real estate prices. Sure, the biggest influence over rents is New York City by far, and New York City rents are going up, surprisingly so. I think it's artificial and fake, but this is the case. This is going to affect the numbers. So at some point, we're going to see that, and that's going to really smack the market hard. Okay, it's going to smack the market hard. Just be. I don't know when it's going to happen, but I'm telling you, over the next 2 or 3 months, we're going to see inflation tick up. That's it. It's sticky, as I told you before. Inflation has come off the highs. It's sticky. Another contributor: China. China's reopening. Commodity prices across the board have gone up because of this China reopening. Look at the confirmation. This is, they track movements of transportation, moving of people moving. That means the economy. Right here, economy's coming back in China. Okay, I don't think it's going to boom, but it certainly is going to contribute to global spike in commodity prices. Okay, but it's not going to help the economy. It's not going to help because U.S. consumer spending is declining. Consumer credit is at all-time highs. Okay, people saying, oh, look at credit versus disposable income. You'll see some people bring that chart out. How do you calculate disposable income? You could try, but it's a pie in the sky. This is more unreliable data. The bottom line is consumers are taking out more credit card loans and more loans than ever before. Car loans, credit card loans. That's not bullish for the economy. Okay, that doesn't end well. It never does. Okay, so what do you do with your money? You had a big move in stocks. Your Tesla's up, 80%, whatever, since the beginning of the year. I think you got to look at for a trade. China looks like the place to go. I mean, stocks was depressed, it's coming back. Here's a chart. When you look at China, okay, look what's heading higher. You got, you've had a move, FXI, BABA, they're just starting, but you've had some laggards here. You got JD, okay, great company. It's been lagging. You got China real estate. This is an ETF that anyone could buy. Chinese consumers have, and you can see here, have all-time high cash levels. They're holding back, but they're there. Okay, China has instituted some incentives for real estate buyers. Okay, it's an incentive. I mean, certainly real estate continues to lag, but this is the engine for the economy. And when you have incentives and you have all-time high cash levels, I'm telling you, historically, you're going to see Chinese start to buy real estate. And going back to the chart, as you can see here, the big laggard is Chinese real estate, rightly so, but could be very interesting. Okay, one last thing about the US. Look, these layoff announcements continue. Yahoo, etc. There's more applicants than way more applicants than jobs, and this is statistics coming from even these places like Indeed, which I think are also manipulated. The world is slowing down, folks. I mean, so I showed this chart before. Dry bulk shipping is crushed. That's global economy. Okay, layoffs are increasing. I mean, I'm certainly not going to wave the bullish flag like all these people. I'm telling you, this is the reality. Okay, stocks should not be going up like this. Okay, individual stocks, okay, I get it. But the entire market having this big move, I mean, this is not a bull market. Okay, so take it all into consideration. All you investors, be careful out there.